So today I'm going to introduce you to a very unique concept, and a lot of you may agree with this, but just hear me out as I explain this out to you. So trading is like poker. Now, a lot of you may step back and say, no, trading is not like gambling. Trading is more where we predict what's going to happen and we have an edge, and that's why we step into a trade. And I completely agree with that. But just hear me out as I compare trading with poker. Now, in poker, you have a 50-50 edge in the sense that it's basically you have a 50-50 chance of success. Your when you actually play, it could go in your favor, it could go against your favor. So the concept is that when you don't have an edge, you don't have any emotions attached. There's no emotion attached to it. And by having no emotions attached to your trade, you now don't have, you don't play aggressively, don't don't actually gamble on your money. So like when you actually put in your first, you don't go all in, because unless you have a good deck in your hand. And let me just come back to your deck. So when you are initially starting off, you have no emotions, you don't have any stake in the game. Well, you do have a stake, but you don't have anything weighing on you to do something irrational. Now, once you get the edge, just like in poker, you will then decide, okay, I have a really good hand right now. I'm going to go all in, or I'm going to like increase my stake. And that's called scaling up, because now you have an edge. Now, the edge could be anything. And like in trade, in poker, your edge would be you've got a good set of like a good hand, and that's why you want to go like higher, or you want to go all in. So once you get your edge, you can decide what you want to do. So if you're in trades, you will then scale up. You can then try to buy more at different levels. You could increase your position sizing, which is also scaling up, but that's basically the term is like you can be more, take a more educated stance in your position. And so this is like, one of the strategies that you possibly have already used. And by doing so now, you, even though you have some emotions into the game, your edge is actually helping you, because you're not now like gambling in the sense of like have a 50-50 stake. So now you have a 60-40 chance by your edge. Now, as your edge increases, you could then have a 70-30 chance of being successful. And then you could scale up accordingly. As your edge increases, then you have an 80-20 chance of being successful. And this is like, chance of being successful. This is chance of being unsuccessful. And it's rare to have 100-0 chance. And that's where, like, if you go into the mindset that I'm going to win 100%, you don't know what the other person's hand has. So you don't know what the news could happen or come out of the market. So always consider an edge is of importance, but just don't like go like kitchen sink on it and like bet everything you have. Because yes, you could be successful once, but it doesn't mean that you'll always be successful. Another example could be GameStop. And this is something like you've probably heard about. GameStop is a stock that actually was trading around the $5 range. And from $5, it, due to market speculation and like, people hyping the prices up, went all the way up to $4.50 and then crashed back down. I think it's trading around $18 right now in 2022. So people speculated the market's going to go up. It's like, this is a very good stock, and increase the price up. But so you could actually do that some year. You could buy if you were interested in this. But this was gambling in the sense that you shouldn't be buying it up all the way year, but you should buy it, just somewhere around year when there is a higher possibility of it going into your favor. So GameStop is an example where a lot of the traders actually, got into the trades year and then suffered a big loss because they could not actually sell it in time and ended up into a lot of loss. So there's never 100% possibility that this could actually keep going up all the way to like say 1,000. That may never happen, or it could happen as well. You never know, but that's where, there's never 100-0 possibility of a success. It's always a ratio. And whenever you select a stock, try to have a risk reward ratio of at least risk. If you're risking 1, you should get a reward of at least 4 or 1 to 3. Never 1 to 2. So this is okay. This is okay. 1 to 2 is, or 1:1 is an absolute no. Never do that. 1:2 is still okay. So what I mean by that is, if you were buying GameStop, this was a good value to buy it at, but don't buy it over year. Even though there is like a lot of potential, if you buy it year, you should have a stop loss just to protect you, because in case if it falls, you just lose so much. This is your risk, 1 to gain like 4, at least 4. But there's also a big downside. So say if it just crashed tomorrow like that, you would have possibly lost 10. Your risk would be actually 10 to gain, whatever. We don't know what X amount. We don't know what's going to be. So that's just a concept of risk reward and how trading can be compared with poker. I do personally feel that poker is more of a gamble and trading is more of, you have an edge, just like in poker, but in trading, you could now understand charts. You can understand where the market's going to turn, what the edge you would have by looking at certain candlesticks. So say, for example, a bullish engulfing pattern. Now, a bullish engulfing pattern is an edge that you would have in the market. By buying at a bullish engulfing pattern, you now have an edge. By buying when the market is close to its moving average, you have an edge. By buying when close to whatever your indicators, if it's a MACD cross, if it's a moving average cross, if it's an RSI, these are all edges. And when you kind of add them all up on top of each other, now you have an edge that would beat the regular, like a 50-50 chance. And now you're going into the 70-30 chance, because 3 of your edges are now stacking up against each other. And that's how you would actually play poker, is when you bet the kitchen sink, is when you have a very good hand and all your edges, all your cards are now lined up against with each other to give you an edge. So I hope that makes sense. I hope it did not confuse you anymore and explain how. So if you're a poker player, if you're a gambler, you now know why trading is more an educated gamble, where you have a lot of aids to your disposal in helping you make a better decision. So I hope this was helpful and helps you trade better or play poker better, because now you know the concepts and how they link to each other. With that, I'll see you in another video very soon.